What are the Roth and Traditional IRA contribution limits? Imagine planning your future and wondering how much you can put aside each year for your retirement. Well, knowing the contribution limits for Roth and traditional individual retirement accounts can help you make smarter choices. These limits are set by the Internal Revenue Service and can change each year. For 2020 and 2025, the maximum you can contribute to either account if you are under 50 years old is $7,000. If you are 50 or older, you can add an extra $1,000, making the total up to $8,000. This extra amount is called a catch-up contribution and helps those closer to retirement save more. Now, Roth IRA contributions have some income restrictions. If your modified adjusted gross income is less than $150,000 as a single filer, or less than $236,000 if married filing jointly, you can contribute the full $7,000. If your income is between $150,000 and $165,000 for singles, or $236,000 to $246,000 for joint filers, you can make a partial contribution. But if your income exceeds these limits, you cannot contribute directly to a Roth IRA. Traditional IRAs do not have income limits for making contributions. Anyone with earned income can contribute up to the limit, which is $7,000 if under 50, or $8,000 if 50 or older. However, whether you can deduct your traditional IRA contributions from your taxes depends on your income and whether you or your spouse participate in an employer-sponsored retirement plan. For example, in 2025, if you are single and covered by a workplace plan, the deduction phases out between a modified adjusted gross income of $79,000 and $89,000. If your income is above $89,000, you cannot deduct your contribution. But if you are not covered by a workplace plan, your contributions are usually fully deductible regardless of income. Remember, the total contribution limit of $7,000 or $1,000 applies to all your IRA accounts combined. You cannot put more than that total into Roth and traditional IRAs in 1 year. Knowing these limits helps you plan your savings wisely and avoid IRS penalties. If your income is too high for a full Roth contribution, you might consider contributing to a traditional IRA and then converting it to a Roth later, a strategy called a backdoor Roth. Also, if you are 50 or older, making catch-up contributions can significantly boost your retirement savings. The deadline to make contributions for a specific tax year is usually April 15th of the following year, giving you some extra time to plan and save. Being aware of these rules helps you get the most out of your workplace benefits and retirement plans, making your financial future brighter.